For once, financials are not leading, even though the 10-year is closing in on 1-1. Let's get to Bob Pisani. Hey, Bob.
Morning, Carl. But still a great week for banks overall. We're up, which is remarkable given the disappointing jobs report. So here's the COVID winter, folks. We're going to be in for a tough 3 or 4 months. And this is why the market reacts so much to stimulus, because stimulus is the bridge that gets us through these disappointing few months here where we're going to have a tough time. Overall, you see energy up. Boy, what a great week for energy. What are we up 10% or so? Tech's kind of flattish for the week, although up today. Banks are down, but they've had a great week. They're up 8 or 9% as a group, and some of the big super regionals are up even more than that. We've had a lot of new highs in the last couple of days, a lot of new highs in industrials, Caterpillar, Dover, some of the big names, some of the banks, some of the material names. Freeport McMoran, new highs as well. So it's been quite a week here. Trends, a little tough to discern, but at least in the first 4 or 5 days, you could see some clear trends. And again, it's a little early here, but small caps over big caps for sure. Cyclicals over defensive. Value's doing better than growth. Small cap value is just killing it this week. And believe it or not, Asian stocks over U.S., that may surprise people, but with the weak dollar and a sort of global reflation trade, look what's been going on in these Asian markets. We've hit new highs in all of the big Asian markets this week. So Korea's up 10%. That's a new high. Vietnam, China, that's the CSI 300. That's sort of the S&P of China. Taiwan, Japan's at the highest level in 30 years. So bear in mind, weak dollar, global reflation. There's other markets doing really well. Europe is shy about 5% of a new high. Remember what's moving the markets. Keep thinking in terms of buckets so you don't get too confused. It's stimulus and the vaccine versus the virus and taxes. So stimulus is the most important thing because it's more checks in people's pockets. It's more infrastructure potentially. It's local government aid. And then you have the vaccine against the virus. That's the most important thing. That battle is going to determine the pace of the recovery, whether we get a recovery starting in the second quarter or the third or the fourth. That's the determinant of that. Speaking of taxes, everybody's dusting off those Biden tax plans. There's a lot of influence on stocks here. So he would raise marginal income tax for those making over $400,000. He'd raise the corporate tax from 21 to 28. He taxed long-term capital gains and dividends at a much higher level towards ordinary taxes. This is going to affect the markets overall here. The issue here is what effect would these taxes have on stock market behavior? Would people hold stocks longer? Would they sell them quicker? Particularly regarding any changes in the higher capital gains taxes. And Carl, raising taxes on the wealthy is going to revive that old debate that raising taxes would not necessarily provide an increase in revenues. Let's go back to the whole 1980s argument. And yes, you're going to have somebody bring up the Laffer curve. Not me, but somebody's going to bring it up. More on taxes and the impact on the markets. TraderTalk.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.